So, in our area, there are a lot of veterans that own homes, a lot of retired military, and a lot of times those retired militaries have a disability rating that will often exempt them from property taxes. Now, why is this important? If you are representing a buyer that is purchasing from an individual that is exempt from property taxes, it's important to know how that escrow account is going to affect them. When we set up an escrow account, we collect taxes from the first day of the year through close date plus 3 months. This ensures that we have enough money in that account so when the taxes come due, we have enough money to make that payment. Now, your buyer should not be obligated to pay property taxes on a home when they didn't own it for a certain amount of time. So what you'll typically see is a seller credit for prorated taxes. They're giving your buyer a credit for the taxes due for the time that they own the home. However, when you're working with a seller who's exempt from property taxes, they have no credit to give. They are not liable for property taxes, so why would they give your buyer a credit? That does not change how your lender is going to set up the escrow account. They are still going to collect from day one of January through close date plus 3 months, but now your buyer's not getting a credit. So this is going to be more cash to close for your buyer. If it's later in the year, it's something that you need to be very conscious of. But when the tax bill does come out, the county should adjust it to account for those prorations. There's going to be an overage in the escrow account at that point, and that's when your buyer will receive an escrow refund. So the money does come back to them, but it is something that they're going to have to put up front.